Before we begin this week's episode of the Grow Your Wealthy Mindset podcast, I want to tell you of a great guide that I made just for you. It's the 12 financial mistakes that keep physicians from building wealth. After talking to hundreds of physicians, I've heard many mistakes, and these are the ones that I thought were most important to share so that you can potentially avoid making these mistakes, or if you've already made them, learn a bit about how you might be able to recover. You can grab the guide at my website, www.growyourwealthymindset.com/12 financial mistakes. Now on to this week's episode. Hello, welcome to the Grow Your Wealthy Mindset podcast, where it is all about helping amazing physicians just like you create a wealthy life free from burnout and with the financial security to practice medicine on your own terms. I'm your host, Dr. Elisa Zhang. Welcome back to the Grow Your Wealthy Mindset podcast. As you start to build wealth, you may start to think more about protecting your wealth. The first line of defense to asset protection is insurance. In this week's episode, I'm going to talk about what insurance you need, what insurance you should consider having, and what insurance most physicians don't need. The first insurance I'm going to start with is health insurance. As physicians, we know how much healthcare can cost. Medical bills are one of the leading causes of bankruptcy in the United States. Even a short hospital stay can cost in the tens of thousands of dollars. We also know how hard it can be for some patients to get care, even when they have health insurance. Even if someone is healthy, anyone can get sick or have an accident that could require surgery. Having health insurance is a must. Another common insurance that you probably already have if you own your own home is homeowners insurance. Homeowners insurance covers your home and belongings against damage or theft. It also includes liability protection if someone gets hurt on your property. If you have a mortgage, whoever holds the mortgage will require home insurance in order to protect the value of the property, which is collateral for the loan. If you don't have a mortgage and you own your home free and clear, I hope it's obvious that you still need to retain homeowners insurance to protect the value of your home, since it probably is one of the largest assets you own. I once came home from vacation to find water streaming like a waterfall from my kitchen ceiling down to my basement. A pipe had frozen and then burst. The ice thawed, and now there's water constantly flowing. After that catastrophe, we now turn off the water whenever we leave our home for any extended period. We ended up having to gut our kitchen, refinish the wood floors in our dining area, and put up a new ceiling in our basement. Make sure that you have enough coverage to rebuild your home if you had to. I coached a physician whose home unfortunately burned down during the LA fires. She had previously been dropped by the insurance company who covered her home and wasn't able to get full coverage to cover the cost of rebuilding her home. This has become problematic in areas where there are a lot of natural disasters. And there are other areas of the country where it's been hard to get adequate or reasonable homeowners insurance due to the risk of natural disasters. As much as you can, try to have enough coverage to completely rebuild your home if needed. If you don't own the home you're renting, you don't need homeowners insurance, but you may want to consider renter's insurance. Your landlord's insurance doesn't protect your possessions or your liability. There are some landlords that require renter's insurance. I've certainly rented in places where I have to have renter's insurance. If you have rental property, I recommend you requiring it for your tenants. Renter's insurance is generally quite cheap and well worth having as a physician. You may think your personal property isn't worth much, but you also get some liability coverage. There are times where I feel like physicians have a target on their back in terms of getting sued, not just for malpractice, but by anyone who thinks that there are deep pockets and maybe a payout that they can get. They don't know that residents and fellows don't make very much money and often even have a negative net worth. So if you're listening to this and you're a resident or fellow who's renting your apartment, I would recommend getting renter's insurance. That's even more true if you're renting a single-family home versus an apartment. If someone in your yard trips over something and gets hurt, they could potentially sue you for liability. In fact, during my fellowship training, I was horseback riding over at the house of one of the OR nurses. The horse I was riding tripped and he fell, and so then I fell. And when I fell, I got a cut on my chin. I was actually on call as an oculoplastics fellow, and so I called my attending who was on call with me as my backup. I didn't want to take my chances with whatever random person was working in the ER that day. It was the day and he was available, so we went into the clinic and he sutured me. We went ahead and billed this as a normal visit, which I was fine with since I had health insurance. Well, my health insurance actually wanted me to sue the OR nurse in order to have their homeowners insurance pay for the cost of my medical bill. Luckily, I was covered under a second health insurance through my husband, and they paid the entire bill. This just shows how crazy liability can be. I've definitely heard cases of people having to sue their family or relatives in order to get something covered that they really needed covered, and it was due to an accident that happened on a property. So definitely have renter's insurance if you are renting and not owning. Auto insurance is required by law. There are three components to auto insurance. There is the liability for the damage your vehicle may cause, either to the property of someone else or by injuring someone else. There's also collision coverage for any damage that happens to your own vehicle. As your vehicle gets older, you can lower the cost of your auto insurance by dropping the collision coverage. There is also comprehensive coverage, which covers the vehicle in the case of theft, fire, or something else that could come up. By law, you need to have liability coverage for any damage or injury that your vehicle may cause. The other coverage is dependent on what kind of car you have and your own financial position. Umbrella liability insurance adds an extra layer of liability protection on top of home and auto policies. It is really inexpensive for the amount of coverage you get, and something I recommend for physicians as you start to build up your assets. Most people start with getting a $1 to $2 million policy of coverage. As you start to grow your net worth, you can increase your coverage. Policies will typically max out around 5 to 10 million. You certainly don't need to go all the way up to 10 million. When deciding how much coverage to have, you want to consider your net worth. As physicians, it is possible to get sued for future earnings as well, so that's another factor to consider. You may also want to think about your own risk exposure. Do you have teenage drivers? Do you like to hold a lot of large gatherings? Does your home have a pool or a trampoline? Do neighborhood kids come and use that pool or trampoline? Do you own rental properties? If you answered yes to any of these questions, you'll probably want a little bit more coverage. I hope it goes without saying that any practicing doctor needs malpractice insurance. Doctors do get sued. You need to be covered. According to the AMA, more than 60% of physicians will be sued at least once during their career. Over a 30-year career, the likelihood increases to 80% or more depending on specialty. Generally, malpractice insurance will be paid by your employer, even if you're doing locums work. If you do any moonlighting or side work, you want to make sure you have coverage for that work as well. When you leave your employer, you may need to have a tail policy, which covers any patient you saw at your prior employer. Most employment contracts will specifically state who pays the tail at the end of employment. This is definitely something you want to negotiate before you sign any employment contract. I've had to pay for tail insurance twice, and now I won't take a job that requires me to pay tail to leave. Long-term disability insurance replaces a portion of your income if you can't work due to illness or injury. There is a waiting period, usually 60 or 90 days, but it can be longer, until payments start. Until you reach financial independence, you need to have own occupation long-term disability insurance. I cannot stress how important it is to have good own occupation insurance. The own occupation part means that the disability insurance will pay out if you can't work doing your own occupation. That means whatever specialty you're doing, whatever surgeries you're doing, you need to be covered for that level of work. There are disability insurance that won't pay out unless you can't do any work, meaning if you could flip hamburgers at McDonald's, it won't pay out. This is why the own occupation part is so important. Depending on where you are in your career and your finances, your ability to practice medicine is likely one of your largest assets. There are 2 podcast episodes of the Grow Your Wealthy Mindset podcast dedicated to discussing own occupation long-term disability insurance. Episodes 13 and 14, both released in August 2022. If you have any questions about long-term disability insurance, make sure you listen to those episodes. The best time to get long-term disability insurance is when you're in residency. Short-term disability insurance also replaces part of your income if you can't work due to illness or injury and has a minimal waiting period time, generally between 7 and 14 days. Some policies have an option for no waiting period for accidents. Some policies will also cover a limited amount of maternity leave. These policies are a bridge until long-term policies kick in. Once you have an adequate emergency fund, you can self-fund short-term disability, meaning you don't need a short-term disability plan because if something were to happen, you would just use your emergency fund to cover your expenses until you start receiving payments from your long-term disability plan. Life insurance is I love you insurance. This is what protects your loved ones financially if you pass away. Anyone with dependents, meaning someone depends on your income, should have term life insurance. This means if you have kids or provide financially for aging parents, you should have term life insurance. If you have a spouse who relies on your income, even if they do work, you should have term life insurance. While my husband doesn't depend on my income, he would live just fine off his own income and our current assets. I actually still have life insurance to cover the mortgages of any rental property we have. He has no interest in real estate, and this would allow him to fire sale any rental property to get rid of them quickly, even in a down market. It would also cover any mortgage payments if there were any issues with the tenants or guests until the properties were sold. Most people, including physicians, should be buying term life insurance, not whole life, permanent life, universal life, or really any other kind of life insurance. There are very few situations where any life insurance policy other than term life would be beneficial. A situation where some physicians may consider some type of permanent life insurance is if you have a lifelong dependent, like a special needs child, who will require financial support no matter your age, and you don't think you'll build up enough wealth to cover their needs before age 65, when a term life policy would no longer cover you. Permanent life or universal life insurance may also be used to guarantee an inheritance or estate liquidity as part of estate planning. But if that's the case, that's something you want to talk about with an estate lawyer. In general, don't mix investing with insurance. These products get heavily sold by financial advisors because they pay great commissions. They're products meant to be sold and not really great for the purchaser. Depending on where you're traveling and what kind of travel you're doing, you may want to consider buying travel insurance. Next week's episode will be all about travel insurance, so I won't talk more about travel insurance now. If you have a pet, you could consider pet insurance. Most doctors can pay the cost of care for their pet out of pocket, including their pet's healthcare costs. If you're the kind of pet parent who would do anything for your fur baby, then you may want to consider pet insurance depending on what kind of pet you have. I have a friend who paid for her dog to have chemo, which is something I don't think I personally would ever do. But if that's something you would do, you could potentially consider pet insurance. If you own a high-value animal, like a winning racehorse, there are specialized insurance policies that you could purchase to protect that investment. If you have a business, you want to consider what kind of business insurance coverage you need, and that will depend on what type of business you have. I have insurance for my coaching business that's separate from all the other insurances we've mentioned here. Any rental properties I have also have the appropriate insurance depending on what type of rental it is. Short-term rentals need different policies compared to long-term rentals. If you have employees, you'll also need to make other decisions like what, if any, insurance policies you offer to your employees. The last insurance I'll mention is long-term care insurance. I am no expert in long-term care insurance, and my current plan is to be able to self-fund any long-term care needs for myself or my husband. Generally speaking, people start considering long-term care insurance in their 50s or 60s if they're in good health. If you're not in good health, long-term care insurance premiums are probably not going to be affordable, even if you can secure a policy. People who should consider long-term care insurance are those who want to protect their assets, but also don't have enough assets so that they can self-fund their care. Unfortunately, the cost of skilled nursing facilities continue to rise, so it can take a lot to self-fund long-term care. With a married couple, paying for long-term care for one person could deplete the finances, leaving the other person in financial hardship. Depending on your personal situation, your age, your health, and that of your spouse, you may want to think about and look more into long-term care insurance. And that concludes a full discussion of insurance. My husband, he always says that insurance is a scam. However, when we had a large insurance claim due to that burst water pipe, I was certainly grateful to have good insurance. At that point of our lives, we had paid less in premiums on all our home and auto policies than the amount that the insurance paid to fix our home. At this point, although I haven't calculated it, I'm positive that I've paid more insurance premiums than I have received in benefits. That being said, I'm very grateful that I have not had to use my long-term disability policy. Do you have all the insurances you need? When is the last time you looked at your policies? This may be a good time to review what policies you have. I purchased my home, auto, and umbrella insurance policies with an insurance broker who reviews policies from multiple companies and then reviews them with me and goes over the options, as well as makes his recommendations. Dr. Stephanie Pearson of Pearson Rabbits reviewed our disability policies when we realized that my husband actually needed to have more coverage. The financial advisor, aka insurance salesman, who we originally purchased our policies from, assumed that he as a high school teacher would have a group policy through his job, which he actually does not. This is why it is so important to choose good advisors, but also understand ultimately you are the decision maker and you are the one that benefits or is hurt by any consequences of the plans you purchase. Next week, I'll dive more into travel insurance. Thank you so much for being a listener of the Grow Your Wealthy Mindset podcast. If you love this podcast, please leave a 5-star review with Apple Podcasts. I would really appreciate it. Have a great week. If you enjoyed this episode, I would love it if you could share it with your friends and colleagues. And now for the disclaimer. I am not a certified financial planner, accountant, or attorney, and nothing I say should be construed as professional investment, tax, or legal advice. This show is primarily for your education and entertainment. I am a physician, but I'm probably not your physician. So if you need any medical advice, please contact your own physician. Thank you. Don't forget to pick up your guide, 12 Financial Mistakes That Keep Physicians from Building Wealth. You can grab that guide at my website, www.growyourwealthymindset.com/12 financial mistakes. You'll also find that link in the show notes.